Hey guys, it's Rahim. Welcome back to the channel. If you're new to the channel, hit the subscribe button because I talk about property investment, personal development, and how to gain financial freedom. In today's video, we're going to talk about how to master the 5 investment rules to achieve financial freedom. You see, investing is science and art combined. Whether you are starting out or you are a seasoned investor, these 5 rules will guide your journey to financial growth. Let's get to it. I really wish I knew these 5 investment rules I'm sharing with you in my teenage, because it would have literally changed my life. I would have been in a better and amazing situation than I am right now. I'm still doing really well, but I'm doing absolutely amazing. But let's get to this rule. The number 1 rule is to start early and understand the power of compounding. Now, why do you want to start early? When you start early, you've got lots of time to grow, expand, and learn lots of things. Because if you start earlier, also you are like a sponge. You'll be sucking in lots of information, lots of ideas, and whilst building your financial situation as well. Let's look at it, the benefit of starting early and the benefit of compounding when you start early. Suppose you mess about in your teenage life, let's say in between 18 and 19, you're just messing about, working, trying to save a bit of money. Let's say you're able to save about maybe £15,000. Maybe you raised that from friends and family, or maybe you've been working, saving to get you to maybe start investing, or maybe you wanted to go on holiday with that money, or maybe decided to do something with it. Let's now look at it this way. You are now in your 20s. You've decided that 15,000 that you wanted to spend on holiday or to do some certain things may not be a wise thing to do. Let's say that you then take that £15,000 and invested it in an index fund. It could be FTSE 100 or any index funds that really work for you. And the index fund tend to generate anywhere between 5 to 10%. Let's just say probably you invest this with someone else. Okay, so let's say that £15,000 generates about maybe 5% every single month, not 7, 8 or 10%. Let's just say 5% every single month. So what you want to do then, you're going to put that 15,000 with that investor, whoever that you're working with, expected to get 5% return on investment. But when you put the money in, the idea of doing that is not to take the money out. Suppose that you put that in an index fund, for example, £15,000, and you are putting in £100 every single month to kind of as a savings or as a pot to increase your investment. Suppose you put that £15,000, you do not touch that for 10 years. All you did was to add £100 every single month. Believe you me, £100 is not a big amount of money to add on top of that every single month, especially if you're working, or maybe if you've got a side hustle or a business going on. So let's fast forward from your 20 years old to your 30 years old. You put that £15,000 up front and you're putting on £100 every single month. Believe you me, no, that investment would have generated you £5,929,000 within those last 10 years. You would have literally become a millionaire at that point. Here's the thing, in order for you to achieve successes like this, is starting early. If you're watching this video, maybe you're in your 20s, maybe you are in your 30s, or maybe even early 40s or 50s, it's still not late. It is only late if you don't take the action now. Take the action now to kind of understand what you want to get into and how you can put an investment fund that will generate you multiple return on investment in the next 10 years. As you can see, if you invest at the age of 20 to the age of 30 on a 5% return on an investment every single month, you'd be a millionaire that is worth £5,929,000. That's what we call the power of compound effect. Second rule, suppose that you've got that going, you've got your investment, you put in every £100. So now what you want to do now basically is so thinking about diversifying. You know, you've got that going on. Maybe you want to start looking at investing in property, where you can buy a property, do it up really nicely and rent it. That would bring you another additional income, which would only help you actually. Instead of increasing your savings of £100 every single month in your pot fund, you can be able to do maybe £100 or £200. Suppose you invest in that property, that means you've diversified your risk, and then maybe you look at another investment strategy. Maybe you want to go into commercial properties, for example. Again, you invest in commercial properties, which will be generating your income. Or maybe then you want to start looking at investing in companies. As long as you diversify your portfolio, you spread that risk. By the time you think about it, believe me or not, you will be worth multi-million in a very short period of time. So think about it. You want to get into property, for example? I love properties. The reason why I love property is because you can diversify within the property industry itself. Let me give you an example. You can start by buying a property, renting it to a normal tenant. That's one way of making money. You can buy a property, you renovate it. Instead of renting it to a normal tenant, you can use it as a serviced accommodation, what we call Airbnb. Or you can buy a property, you renovate that property, you change the use from a normal house to renting that property in a room by room basis, which will also expedite your return on your investment. Alternatively, you can buy a property, convert it into a flat and a shop at the bottom as well, which gives a mixed use property. So there's so many ways you can diversify your investment in order to get better return on your investment. Number 3, do your homework. Whatever you're doing, always analyze, understand the data, understand what you're getting into before you start your investment in that specific industry. You might not know every single thing. If you don't know, get someone who knows, who specializes in what you're getting into, to guide you and help you understand what you're doing, whether the homework that you're doing or the works you're doing around that investment industry or company for that matter, you know exactly what you're doing and you're not risking lots of your money in it. The 4th rule, invest for long term. Here's the thing, if you invest for long term, that's the only thing that will make you generational wealth, because getting wealthy is not a get rich quick scheme. You have to stay in the game for a long time in order to make serious return of investment. I've seen so many people have approached me helping them with their investment by they started trading stocks online. They realized they are gambling because they want to make cash quickly. They start trading cryptos, it did not work. They did forex, it did not work. So when they come to me, when I'm speaking with these people, I ask them what are their aim, where they want to get to. Are you want to get rich quick? Are you in a get rich quick scheme? If they are, I think I try to tell them that's not how it works. In order for you to generate generational wealth that will live beyond you, is thinking long term, thinking about what can I get in the next 5, 10, 15, or maybe even 20 years instead of what I'm going to get now, which will not really gives you better return on investment. And most of these things that you want to get rich quick scheme thing are things that involve gambling, involve lots of risk, and most of the people I've met in that cases are people that have lost lots and money. So if you want to think about investing, generating wealth, making massive passive income, think long term, because long term is what gets you to where you want to go or achieve the goals you've set yourself to achieve. I like to use properties because property is a solid investment that would outlive you. Let's give an example. Suppose you bought a property today. You fix that property if you had to fix it, and you rent that property out. So once you rent that property does 2 things for you. It gives you money every single month, what we call passive income, without actively working for it. And also it goes up in value. That's what we call capital appreciation. So in average, property prices goes up by 5 to 15% a year in the past 80 years in the UK. Imagine now having that property generating you income every single month, and you haven't sold that property. You can literally gain the income from that property until you retire or maybe passed away, and you can pass that property on to your children, to your great-great-grandchildren, and so on and so forth. That's what we call financial fortress. That's what we call wealth, because that wealth, that property would outlive you, because that property will be there forever and ever, and so many generations would use that property for a financial benefit as well as maybe tax advantage, who knows. The 5th rule, know your exit. Whenever you enter into an instrument or to an investment industry, what are you there for? What do you want to achieve from it? When you're thinking of going in, think about your exit strategy. Are you looking at for long term? As you know, long term always works. How long it is? When do you want to increase your investment in that sort of industry? Or when do you think to diversify to move to another industry? Suppose that investment vehicle is generating you lots of passive income. Maybe perhaps you want to think about, okay, when I hit to this amount, or when I hit to this goal, I want to do XYZ, because you have to have the end in mind before you actually start your investment journey, or maybe your entrepreneurial journey. So that's how you could build generational wealth, become a decamillionaire, and ultimately billionaires. These are the formulas millionaires use. These are the formulas billionaires use. These are the formulas successful people use. Right, let's recap. Number one, start early and understand the power of compounding. Number two, diversify your portfolio. Number three, do your homework and understand where you're going. Number four, invest long term. Number five, know your exit. As I said earlier, investment is not a get rich quick scheme. It is about making informed decisions, being patient, and letting your money work a lot harder for you over time. I really hope this video has been helpful. If this video has been helpful, hit the like button below, subscribe to my channel for more amazing videos. I look forward to sharing the next video. Thank you.